Hello.
Good evening, sir.
Good evening, everyone. Let everyone join in. Are you able to hear me? Audio is clear, right?
Yes, sir. Yes, sir.
Okay, let everyone join in. Good evening, Jyoti. Good evening, Sarvamangala. Good evening, Jayashri. Let everyone join in. Happy evening, Sindhu, Anjali. All right, friends. Shall we start off now? Wait, I think, okay. Perfect. Let's start off now, friends. So I'm live on YouTube also. Excellent. Okay, I'm going to start off with the session now. So friends, we did around 4 questions before break. Now after break, we will do the remaining. So let me start off with question number 5 now. That is a question on constant proportion portfolio insurance policy. So I'll write down working note number 1. Basic data. Ankit has funds of 10 lakhs. Okay, which, okay, 1 minute. What is the question number? Question number 5. Okay. Ankit has funds of 10 lakhs. So I'll write down point number A, funds available. Hold on. Sarvamangala, you're not able to see the screen. Others, are you able to see the screen now? Sarvamangala, some issue at your end. Okay, please do check. All right. So the funds are available is how much? It is turning out to be 10 lakhs. Point number B, they have told they want to invest in the share market with a rebalancing target after every 15 days. Okay, so I'll write down rebalancing after every 15 days. The present Nifty is 19,675, 679. 19,679. Minimum Nifty is 18,104.68. 18,104.68. So can you tell me what is the percentage fall that you're talking about over here? You get the fall as 8%. Am I right? Okay. So you get the fall as. He wants to know as to how he should rebalance his portfolio, and they are keeping a multiplier as how much? 2. All right. So friends, when you keep a multiplier of 2, I'll write down working note number 2, amount to invest. In order to find out the amount to invest, we have to have two things. One, we need to have a portfolio value. So now in our case, the portfolio value is how much? 10 lakhs. Now tell me, what is the maximum fall they have told over here? 8%. From this 8%, I can find out the floor value. So how much is 10 lakhs minus 8%? So you get the answer as 9,20,000. This will be your floor value. Okay. Therefore, the amount to invest, the formula is portfolio value minus floor value into the multiplier. Okay. So what is the answer you get over here? You get the answer as 1.60 lakhs. That is going to be the amount that you are supposed to invest. So what this means is that if this person is having a total of 10 lakhs, out of this 10 lakhs, 1.60 lakhs is going to invest in the portfolio. What is the balance money coming over here? 8.40 lakhs. This he will invest in RF. I'll give you a minute. Please scribble down this. Jaswin, you have a doubt. How do we calculate 8%? I'll give you the formula in bracket. Thank you for letting me know about that. It will be 19,679 minus 18,104.68 divided by 19,679. It's falling from 19,679. Am I right? Perfect. I think you're all done. Can I go to the next part now? Okay. Okay. Swaraj still writing. You don't have to write down the complete thing, Swaraj. Just scribble and do it. I will share these handwritten notes in the WhatsApp group. Okay. Right. I'll go to the next part now. So I think once you get this answer, now what they are saying over here is that immediately to start with, we got the answer. After 15 days, they want to do rebalancing. So I'll write down the next working note. Rebalancing after how many days? After 15 days. So I'll draw a table. Particulars. We have funds invested in equity, in RF, and we have the total. So point number A, current balance. So how much is the current balance you have? Do you have the value as 1,60,000? 8,40,000. Total turns out to be 10 lakhs. I will now write down point number 2, that will be the revised balance. So friends, what has happened? Your Nifty has fallen down to 19,088.63. Am I right? So what happens over here is it started off at 19,679. So here the formula would be 1,60,000 was when the Nifty was 19,675. Now the Nifty balance is 19,088.63. So can you tell me what will be the revised value that you get over here? Do you get the answer as 1,55,200? Perfect. Your RF will remain the same. So if you take this 8,40,000 plus 1,55,200, you get the total value as 9,95,200. Once you get this, then we go for the next step, which is called as rebalancing. So here the formula will be portfolio value minus the floor value. How much was the floor value that we had over here? 9,20,000 into the multiplier. So this minus 9,20,000 into 2, when you do, you get the answer as 1,50,400. All right. Now I should keep the total at 9,95,200. So minus 9,95,200, when you do, you get the answer as 8,44,800. So here you will get a difference. That is, earlier it was 1,55,200 minus 1,50,400. There is a 4,800 rupees of reduction. That means they are going to sell, and that same amount they will invest in the second portfolio, that is in the RF. That's why 8,40,000 became 8,44,800. Can you just read through it, scribble and write down and understand this part now? Exactly, Bilal. This is similar to the not Sunidhi question. There was one more question in our material that we work out. Sunidhi was constant ratio plan. There, what we had to do was we had to maintain the same ratio of 1:1. Here, you put in equity based on this formula of constant proportion. There was one more question, not Sunidhi. Indira. That question started with the name of Indira. All right, friends. Can I go to the next part now? So I'll write down the next working note. Then you have rebalancing again after 30 days, if I'm not wrong. Ready? Shall we do that now? So now what happens after 15 days further from the Nifty touches 20,977? I'll draw the same table, particulars. You have equity, you have RF, and then you have the total. So point number A will be your current balance. So how much is your current balance? 150,400, 1,50,400, 8,44,800, 9,95,200. Okay, then I'll write down point number B, revised value. So friends, now what will happen is they have told that the Nifty has fallen to 20,997.493. So I'll write down 1,50,400 was the value when it was 19,088.63. Now it has become how much? 20,997.493. So what's the answer you get? Do you get the answer as 1,65,440? Perfect. Whereas the RF will remain at the same value. So you get the total as 10,10,240. Am I right? Okay. So once you get this value, then what are we going to do? We will do rebalancing. What's the formula for that now? Portfolio value minus the floor value into the multiplier. Do you get the answer as 1,84,80? Okay, total should remain at 10,10,240. Therefore, you get 8,29,760. This is your balancing figure. Am I right? Now tell me what is the difference that you get over here? 1,84,80 minus 1,65,440. When you do, you get 15,040 as your difference. So this much I should buy equity. So I should sell my RF also for exactly the same answer. Can you write down this and finish it off now? We are done with the question of constant, proportion, portfolio, insurance, policy. Friends, Thursday I'll be doing MTP, okay? Thursday night, same time. Maybe I'll start off a little early. Maybe I'll start off by 6:30 or 6 o'clock. I'm not sure about the exact time. I'll announce it soon for sure. But Thursday we are planning to do MTP. MTP, first question is a beautiful question. Guru Nirupama, both will not get over. We'll do one on that day. Okay. And then one we'll do next week. Then we'll have a Super 25. All right. Perfect. I believe you are all done with this part. Can I go to the next one? So we are done with this question also. Question number 6 is a beautiful question on mutual funds. In my regular class, I do it and I call it as an atom bomb question. So those who have already attended my class, for them, this should be easy. Let's just discuss and do it. It is an ODBE, yes, one day before the exam. Okay. Now here, if you see, on 1/7/2010, this fellow has invested 50,000. 50,000 at the initial offer in the mutual fund at a face value of 10 rupees each. Rupees 50,000. So that will be 5,000 units. $5,000 units into 10 rupees. So what is the answer you get over here? Do you get the answer as 50,000 rupees now? Correct? Okay. At the initial offer in mutual fund at a face value of 10 rupee on 31/3/2011. 2011, a dividend of 10% was paid. All right. And annualized yield was 120%. 120%. On 31/3/2012, 20% dividend, 20% dividend, and capital gain is 0.6. You have a slight twist, you have a capital gain also coming in this case, was given. Mr. X redeemed all 6271.98 units on 31/3/2013. 31/3/2013. It was how much? 1 minute. Redeemed 6271.98 units was completely redeemed. 1 minute. And his annualized yield was how much? 71.50%. I believe all the data has been clearly put over here. Yes, please write this down or draw this diagram in your books. Right. Can I go to the next part and do it one by one? Okay. So now I'll write down the next working note. Analysis of 31/3/2011. Okay. So now on that date, what is the dividend they have told over here? 10%. So I'll write down point number A. Your dividend amount will turn out to be 50,000 rupees into how much percentage? 10%. Do you get the answer as 5,000 rupees? Or we can do it on a per unit basis also. If you want, we can do it on per unit. Then it will be very easy. That will be 10 rupees into how much percentage? 10%. So do you get the answer as 1 rupee over there? Okay. Next one. They have told that on this date, what is the duration from here till here? That is July to March. That is going to be I think 9 months, correct? Correct. So for 9 months, the yield is turning out to be how much percentage? 120 percentage. So can I say NAV1 minus NAV0 plus D1 plus CG1 divided by NAV0. This is for 9 months into 12 by 9 should give you the annualized yield as how much percentage? 120 percentage. So let's solve this and see what's the answer we get over here. 9 minus 1 plus 10. I believe NAV1, I will get the answer as 18 rupees per unit. Perfect. Fine. Once you get this 18 rupees, in this question, are they reinvesting dividend or are they distributing dividends? They are reinvesting. That is why the closing units has increased to 6271. So I'll give a note over here. Since closing units has increased and there is no bonus or further issue, it means what? It means dividends are reinvested. It means dividends are reinvested. So then I'll write down the next working note. Units on, what is the date? 31/3/2011. Units on 31/3/2011. Yes, Jayashree, that note is important from exam point of view. Okay. So now let's find out the units. How will you find out the units? We have the opening number of units. What is the opening number of units? If I'm not wrong, it is 5,000 units. Correct. Point number B, dividend amount. So now the dividend amount will be 5,000 units into 1 rupee. So do you get the answer as 5,000 rupees? Correct. How much is the closing NAV that we just now found out over here? 18, correct? So I'll just come and put it over here. NAV1 is equal to 18 rupees. D1 is equal to 1 rupee per unit. Okay. I'll come back over here. So the NAV at which you're investing is 18 rupees per unit. From this, can you tell me how many units will be reinvested? That will be 5,000 divided by 18. Do you get the answer as 277.77 units? Correct. Therefore, what will be your closing units? This along with 5,000. That will be 5,277.77 units. I'll give you 1 minute's time. Please write this down. You want the previous slide, Swaraj? Fine. Okay. I'll just go and put the numbers here now. So you get the number over here as 5277.77 units. All right. Once you get this, now we go to the next day. That is 31/3/2012. What is the duration from here till here? Is it 12 months? Okay. What about the last period? I think that's again 12 months, correct? So what is the total duration that you have? You have 9, 20, 12 and 12. 24 plus 9 will be If I'm not wrong, do you get the total as 33 months? Perfect. Now, friends, listen very carefully. Here they have a dividend of how much percentage? 20%. Here we had a dividend of 10 and the units went up to 5277. Here you have a dividend of 20, after which we don't know the closing number of units. But we know over here they have how many units? 6271. Is there any dividend given during this time? I repeat my question. Is there any dividend given during this period? No. That means whatever is the closing units over here will be the opening units over here. Therefore, can I not say based on this information that units over here will be 6271.98 units? That same thing will be the units on the other day also. Okay. So I'll come and write down. I'll write down the next working note. Closing units as on, what is the next date? 31/3/2012. Closing units as on 31/3/2012. So I'll write down since no dividend has been declared between 31/3/12 and 31/3/13. This means the closing units of 31/3/12 and 31/3/13 will be the same. All right. So therefore, we got to know the units over here are going to be 6271.98. Next, I will write down dividend on 31/3/2012. Have they told the dividend percentage as 20%? Okay. Now, one thing they have told it as 20%. Okay. Next one. They have told over here that the capital gains is 0.6, that we will consider it separately. We know the units are 5277.77. So dividend amount will be 5277.77 units into 10 rupees into 20%. So do you get the answer as 10,555.54 rupees? This is the dividend. Now, this dividend will be reinvested, correct? So let us find out how many units are reinvested. We now know that over here we have 6271.98. 6271.98 minus 5277.77 was there earlier. So what is the extra units which has got invested over here? 994.21 units. So basically, how much? 10,555 was invested at some NAV that gave 994.21. Therefore, can I write down NAV on 31/3/2012 will be 10,555.54 divided by this. That turns out, okay, hold on. Even the capital gains is getting reinvested. Sorry, friends, there are two options. Okay, wait. I think I forgot about that. Wait. I missed out capital gains. I assumed only dividends are getting reinvested. So let's find out the capital gain. That will be 0.6 rupees per unit into 5277.77. Do you get the answer as 3166.66 rupees over here, friends? Correct? Therefore, what will be your total distribution over here? 10,555.54 plus 3166.66. So what's the total? Do I get the answer as 13,722.21? Now tell me, therefore, what will be my NAV? 13,722.21 divided by 994.21. Do you get the answer as 13.80 rupees per unit? Perfect. So we are done with this part also. Please write down, scribble and write. Perfect. Sindhu, in reality, mutual funds work in multiple ways. In some cases, they only reinvest dividend, capital gains will be distributed. In dividend reinvestment plan, only dividend is given. Some cases, both are reinvested. So they have multiple permutation combinations, to be honest. Here, what we will assume is we'll go by how they are doing it. They will assume that even capital gains are getting distributed. All right, friends. I believe you're all done with this. Yes. Can I go to the next part now? So I think we are done with the second scenario also. Okay, we got the NAV as 13.80 over here. Okay, now I'll go to the last part. There they have given the yield as how much? 71.5%. So I'll write down the formula would be NAV1 minus NAV2. So here I'll write down 71.5% is equal to NAV3, the last one. That is, how many units are there in the end? 6271.98, correct? 6271.98 into NAV3 minus opening NAV. What is the opening NAV? I think it was 5 lakhs, correct? Plus C1 plus CG1 plus D1 will not come because it's all getting reinvested. Whole divided by 5 lakh. This is for 33 months. I need to convert it to 12 months. So once I do like this, I can find out my NAV3. Can somebody help me with this? Is it 50,000 or 5 lakhs? 50,000, is it? Okay. Okay. Can you please work out and tell me what's the answer? Do you get the answer as 23.65 rupees per unit? So we are done with this question. I'll give you a 1 minute cool off time. Perfect. Can we take with 31/3/2012? No, George, I'll tell you, you cannot take that because when you use the word annualized yield, it is for the entire life. You just take mutual funds in money control app and just check. They always give the yield from the beginning till the date. All right. Perfect. Can I go to the next question now? I believe we are all done with this one. Okay. So we are done with question number 6 also. Question 7 is an easy question on futures. Let's do it together now. Question number 7. Working note number 1. Basic data. Point number A. A company is long on 10 MT copper at 474. So I'll write down current position long on 10 MT, 10 metric ton at 474 rupees per kg. So friends, what happens is 1 metric ton is 1000 kg. So I think the total you will get the answer as 47,40,000 rupees. Aparna, that is one of the assumptions, but we'll go by the study material. If your textbook has made a reinvestment, we will also assume it in the same manner. Okay? Yes. So the current position is 47,40,000 and intends to remain so in the ensuing quarter. Standard deviation of spot is 4%. Standard deviation of the future is how much? 6%. They have given a correlation over here, which is how much? 0.75. Okay. Now they want to find out what is its hedge ratio, what is the amount of copper future it should short to achieve a perfect hedge if the initial margin is 8%. So friends, here there is a small twist. They are finding they have given an initial margin also. So I think once you put up the basic data, I will write down working note number 2, hedge ratio. Friends, the term hedge ratio over here means beta, because in order to do a perfect hedge, we use the formula S0 into beta into 100%. So in that, since beta is used for hedging, we have to take the hedge ratio as beta. So normally, what is the formula for beta? Standard deviation X divided by standard deviation M into correlation XM. What does it mean? For every 1% change in the market, how much is the change in the security? This is the normal meaning of the word hedge ratio. But here we have standard deviation S divided by standard deviation F into correlation of SF. Or the logic is for every 1% change in future, how much is the change in what? Change in the spot market. I'll give you a minute. Please go through this now. So therefore, the formula would be 4 divided by 6 into 0.75. Do you get the answer as 0.50? Correct? So once you get 0.50, here I will write down point number E. Action to hedge would be S0 into beta into 100%. So 47.4 lakhs into 0.5 into 100%. So do you get the answer as 23 lakhs 70,000? This is going to be the value. Can you please write down this in your books now? Wait, first you write down this. Now come and write down this. Then add a short point here also. Margin will be on this 23,70,000, 8%. That's 1,89,000. Done, friends. So we are done with this question also. Shall I go to the next question now? Okay. So now we go to a beautiful question on Forex, a question on interest rate parity theory. Bilal, 1 MT or 1 metric ton is 1000 kg. Okay. Now, here I'll write down working note number 1, basic data. What I'll do here is I'll draw a table, particulars. We are having 3 months, 6 months, and what is the last one? 12 months or 1 year. Point number A, they have given you the dollar interest rate. So friends, 11.5% is per annum. So how much is 11.5 into 3 by 12? Do I get the answer as 2.875%? Then they have given the franc interest rate. That is 19.5% into 3 by 12 would be 4.875%. We don't know what is the forward franc per dollar is not given. Okay. And they have not given the franc discount. Franc discount is not given. Next one is 12, 1 by 4 is for 6 months. So that will be 6.125%. And they have given a discount over here as 6.3. So discount would be minus 6.3%. All right. Next thing what we know is 1 minute, that is per annum. So I think we should convert this, it will become 3.15%, half of that. Okay. For 12 months, we know the interest rate over here as 20%. Okay. And this one is 7.52 franc per dollar. All right. So I think this is the table that we need to fill up now. So we can start and do it one by one. So I'll start with 3 months. So I'll write down the next working note now. Analysis of 3 months. Okay. I'll start with the spot rate. I believe the spot rate is given in the question as 7.05 franc per dollar. This is given. Then they have given the dollar interest is given. And they have given the franc interest also. Dollar interest was 2.875% and the franc interest is 4.875%. From this, we need to find out the forward rate. Friends, in this, franc will be the RH, dollar will be the RF. Why? Because the exchange rate is franc per dollar. So the equation would be 1 plus RH divided by 1 plus RF is equal to forward divided by spot. Can somebody please work it out and tell me how much is the franc or the forward rate that you get over here? Do you get the answer as 7.187 franc per dollar? All right. So once you get this, now they're asking you for the rate of depreciation. Am I right? So friends, depreciation is what? Plus or minus? Depreciation is minus. Depreciation of franc is minus. So that will be 7.05 minus 7.187 divided by 7.187. That will be for 3 months into 12 by 3. So 7.05 minus 7.187 divided by into 12 divided by 3. Do you get the answer as minus 7.62 percentage? Yes, so we are done with the first period. Please scribble down. One moment, in your book, they have got a different answer, 0.142. That's a rounding of difference is what I believe. Yes, it's the rounding of difference. Our answer is correct. Geetika, here the base value has to be the spot rate. But if you want to do it like that, I will have to rework in a different manner. Should I do it and show you? See, what happens is when we are doing it like this, actually dollar is a commodity. We should change it. So alternative way, I'll tell you. Okay. Can you tell me what is 1 divided by 7.05? 0.05. Do you get 0.1418439 dollar per franc? And what about our forward? Forward rate is 1 divided by 7.187. That is 0.1391401 dollar per franc. Now, as you told, we are actually supposed to do what? Here, the forward minus spot by spot is what's the formula that you would have learned. Am I right? So the formula would be 145 minus 0.1418439 whole divided by 0.1418439. Just try it out. What answer do you get? $7.62. You get exactly the same answer. Just check it out. You'll get the same answer. You'll get the same answer as 7.62%. All right. So we are done with the first part. Can I go to the second part now? Okay. So once you're done with the first part, yes, I go to the second part and I'll write down the next working note. Analysis of how many months now? Analysis of 6 months. So now in 6 months, we know the spot rate. 7.05 franc per dollar. They have given the dollar interest rate. So I'll write down the 6 months interest rate is how much? 12 1 by 4. 6.125%. And next, they have only given the depreciation. What's the depreciation that we got? Minus 3.15%. So can I say minus 3.15% is equal to, just like we did earlier, can I not put 7.05 minus some forward divided by forward into 12 by 6? Can somebody please solve it and tell me what is the value of F that you get over here? Do you get the answer as 7.163 franc per dollar? So once you get this, it will be 1 plus RH. So in the question, they have given the dollar rate, that is RF is given. 1 plus RH divided by 1 plus, this will be equal to 7.163 divided by 7.05. Can someone please do a backward working and tell me what is going to be the RH now? Hold on. There's a mistake. I don't think it's 7.163. It should be 7.28, right? Wait. Should I do it? Here's some mistake. One moment. Let me just solve this part first. Here there is some error that I feel has come up. Oh, wait. 12 by 6 is not required. It's already done, right? This 3.15 is after doing 12 by 6. So sorry, friends, that was a mistake here. So it will be 0.0315 F is equal to 7.05 minus F. Therefore, 7.05 will be equal to 0.9685 F. Therefore, F will be 7.05 divided by 0.9685. Do you get the answer as 7.28 franc per dollar? Sorry, friends, I took a double effect there, so that was wrong. And here you will get the number as 7.28. Can you please solve it now? Yes, you can take it as 6.3, then you should do 6 by 12 or 12 by 6 you will have to do, that's all. What's the RH that you get over here? Do you get the answer as 9.58% for how many months? 6 months. Therefore, what will be the number for 12 months? 19.16% for 1 year. Am I right? Perfect. That answer is also correct. Shall we go? I'll give you a minute's time. Santosh, your doubt is? Yes, 3.15 is for 6 months. So annualizing is will be 6.3%. I'll give you a minute's time. Please write down this and absorb this part. All right. Can I go to the next part now? Yes. So I think we are done with 6 months. Now I'll write down the next working note. Analysis of how many months? Analysis of 12 months. So when you talk about 12 months, they have given the franc interest rate is given. How much is a franc interest rate that's given over here? 20% per annum. Spot rate is given. What is the spot rate? 7.05. I believe the forward rate is also given as 7.52. So from this, I think it's easy to find out the dollar interest rate. That will be 1 plus RH divided by 1 plus RF is equal to forward divided by spot. So now tell me, what is the answer that you get over here? I think you'll get the answer as 1.125. Do you get the answer as 12.5%? Perfect. So you get the RF or the dollar interest rate as 12.5%. Now, in order to find out the franc discount, I have taught you discount is going to be what? Plus or minus? It will be minus divided by 7.52. Do you get the answer as minus 6.25%? So we are done with this beautiful question also. No, you cannot add like that, Harishankar. I don't think you'll get the same answer. That's because rate of appreciation and rate of depreciation will be two different things. Okay. Friends, I'll give me a minute. I'll fill some water and come back. Can you please scribble down this in your books in the meanwhile? Yes, friends. Are you all done writing this? Can I go to the next part? Okay. So I think we are done with question number 8 also. Let's go to question number 9. 9 is another beautiful question, friends. Let's do it. Working note number 1. Basic data. Yes, Bilal, a good point. When you fill up the table, you have to put the full amounts only. Okay. But Harishankar, in RTPs, they have taken 7 divided by 96 and getting the same answer. Harishankar, you are getting the same answer. That's the luck because 7 point, it's not precisely correct. Just check it out. 7.05 plus 3.15% is 7.272. Okay. 7.05 divided by 96.85 is 7.279. There is a difference, but you're not coming to know because it's rounded off. But both are conceptually different. Okay, you want me to fill the table, Swaraj? All right. So if you want, we'll fill up the table. I'll just go back and fill up the table now. So what is the number you get for 3 months? We have got the answers as 7.187. What is 7.187? That is a forward rate. Okay. All right. And what about the other one? Then you get the answer as 1 minute. Frank discount. What is the frank discount that you get over there? 7.62. %. All right. If they're putting it that way here, I should put minus 6.3%. Correct? Minus 6.3%. You want to put everything on a per annum basis, or we can put it on a periodical basis also if you want. But let's put it on a per annum basis if that is what you want. Okay. So then I think first table is sorted out. Let's go to table number 2. Here you have to find out the frank interest rate. So I think we got the frank interest rate as 9.58% for 6 months, or that is 19.16% for 1 year. And here it will be 6.125 into 2. That is turning out to be 12.25%. All right. Forward frank is how much? Forward frank is 7.28 is what you get over here, right? 7.28. All right. What about the last one for 12 months? What is the answer you get? You get 7.52. And what? Sorry, I put it in the wrong place. That's already written down, is it? Okay, so we need the dollar interest rate. How much was the dollar interest rate? 12.5%, 6.25%. All right, friends, are you all clear now? Perfect. Can I go to the next question now? Yes, let me go to the next question. Okay, suppose you're a treasurer of a company of XYZ PLC in the UK. So you are right now in UK. XYZ is having 2 subsidiaries. One is in Amsterdam, one is in Switzerland. So now let me just put it like this. Right now I am in UK. You are having 2 subsidiaries. One is Amsterdam and the other one is Switzerland. George, yes, the table has to be put. All right. Can I go to the next part now? Okay. So Amsterdam and then you have Switzerland. XYZ has got 2 overseas subsidiaries. Okay. The Dutch subsidiary has a surplus euro of in the amount of 7,25,000. So Dutch would be which one, friends? Amsterdam or Switzerland? I think Dutch will be Amsterdam, 7,25,000 euro. This is the amount available over here, which it does not need for the next 3 months, but which is needed at the end of 91 days. The Swiss subsidiary has a surplus of Swiss francs 9,98,077. Okay. Again, it will need on day 91. XYZ in UK has a net balance of 75,000 euro that is not needed. So here they are having 75,000 pound, not euro, pound, which is not required. What is the advantages of swapping euro and Swiss franc into sterling? So basically their question is they want to swap or transfer the euro amount and the Swiss franc amount directly into what? Into sterling. All right. Yes. Yes, Bilal, we have to know the world map, but you can make some guess. See, Switzerland means it will be Swiss franc. So obviously the other one would be Amsterdam only, right? Okay. Just draw this chart in your books and understand this question. All right, friends. Yes, Aditya, what's your doubt? I have asked you to unmute. Yes, Aditya, tell me.
So can you hear me?
I can hear you, Aditya. Tell me.
Yeah. So in the sum, they have asked us which is more advantage, like swapping euros and Swiss francs to sterling.
Exactly.
Will that be a question where we will have to ascertain which is the most advantageous position for the?
For the?
I mean, which will be for the funds which is available across the sectors.
Yeah. See, what
or
we are
across
saying
the
is
companies.
that we are having two options. One, keep the money in each of these places. Okay. And convert at the end of 3 months. Option two, convert now, and after converting, you use it in UK. Which is better is what they are trying to ask over here.
So not among the three, which is better. It is not like that.
No, not like that. Because all the three are having surplus money, correct?
Yeah. Yes.
We have two options. Option one, keep in respective countries. Okay. And
Okay.
then what you do is at the end of the period, you convert the entire thing into pound. All right.
Okay.
Option two, what you can do is you don't have to even, you can convert in pound today. Okay. And then you invest.
Okay.
I hope you're clear now. Okay.
Yeah. Yes.
Right. All right. Let's do it now. So basically, they're asking the advantage of swapping. So I'll write down the next working note heading, analysis of no swap. So now listen, if I don't swap, I will put a table, particulars. We are having three countries over here. First, we are having UK. Then I have Amsterdam. Then I have Switzerland. All right. We know the balance also. How much is the balance lying in each of the place? It is going to be 75,000 pounds. Okay. And whereas here it is 7,25,000 euros. And the last one is 998,077. 077 Swiss francs. Am I right? Okay. Now, after we have put up this, I will add interest. So once you put it there, they have given the interest rates below. So what is the 91-day interest rate they have given over here? They have given you a beautiful table. So first we will take pound. Pound, the interest rate is up to 1 lakh is the slot that we are having. Interest rate is going to be percentage per annum. So it's going to be 1% per annum. So how much is 75,000 into 1% for 1 year into how many days are we talking about over here? 91 days, correct. So into 91 divided by 365. You will get the answer as 186.98. Wait, I think they have taken 360 days. Is it told in the question? Yes, it's told in the question as 360 days. Oof. So let me do it again. 75,000 into 1% into 91 divided by 360. Do you get 189.58 pound? So my closing balance will be 75,189.58 pound. Okay. Second one is Amsterdam. Amsterdam, what is the amount that we have? 7,25,000. That's here. Amsterdam is euro, 2%. So it will be 7,25,000 into 2% into 91 divided by 360. You get 3,665 as the interest. Let me confirm. Yes, 3,665.27 euro. So now tell me 7,25,000 plus 3,665.27 will be 7,28,665.27 euro is what you will get over there. All right. Switzerland 9,98,000. That is again coming in this. It will be 0.5%. 0.5% into 91 divided by 360. We'll get the answer as 1,261.45 Swiss francs. All right. So 998,077 plus 1,261.45 will be 999,338.45 Swiss francs. All right. So once I get this number, I can now convert it. So while converting, I believe they have given you the bid rate and the ask rate. They have given you the spot rate. 91 days forward is given. Here they have given CHF bar pound is also given. So let's do one thing. First, we'll scribble down till here. Then I go to the next part. All right, friends. I'll now go to the next part and I'll write down determination of forward rates. Determination of forward rates. So there I can write down particulars. Bid, ask. Here I don't point number A, spot rate 0.6858. Other one 0.6869. Okay. They have given it as 0.0037. And other one is 0.0040. Is it in ascending order or descending order? Ascending. Add or subtract? Add. So the answer is 0.6895 for the first one. 0.6909 for the second one. This one is what? This is pound per euro, correct? It's also pound per euro. Now here I'll write down again particulars. You have bid rate and then you have ask rate. I will now write down spot. Spot is going to be CHF bar pound. CHF bar pound 2.3295. And the other one is 2.3326. 3326. You have a swap point. What is a swap point? 0.0242. And the other one is 0.0228. 0.0228. Ascending or descending? Descending order. So it will be 2.3295 minus 0.0242 will be 2.3053. Okay, and the other one will be 2.3326 minus 0.0228. That is 2.3098 CHF bar pound. Okay, so once we get these things, what we can do is we have got the you don't draw like this lines, okay? So I can take the exchange rate now. So when I'm already in UK, I don't need an exchange rate there. So here the figure will be 751,898.58. All right. But Amsterdam, whatever euro I get, I will sell the euro. What is the bank going to do? Buy euro and sell pound. So let us check whether we have what is the commodity in the question. Euro is the commodity. So we are selling euro, bank is buying euro. Bid rate or ask rate? bid rate will be applicable. So what is the forward bid rate? 0.6895. Euro per pound. 7,28,665.27 divided by 0.6895. So you get 10,56,802. 802 pound. Let me confirm the numbers, friends. No, wait. 6895 is correct, but they have multiplied. They haven't divided. Wait, have I taken it wrong? Yes, it's pound per euro. Sorry, I wrote it wrong, so the answer also went wrong. It is pound per euro. Okay, so then you should multiply. So can you tell me, once you multiply, what's the answer you get? 5,02,440. Okay, last one. You have Swiss francs, you sell the Swiss franc, the bank is going to buy Swiss franc and give you back pound. Correct? So now here when you see pound is the commodity, so it's going to be the ask rate 2.3098. 2.3098 what? CHF bar pound. Multiply or divide. I think now it will be divide. 999,338.45 divided by 2.3098. Do you get the answer as 4,32,651? All right. So when you add up all these things, what's the answer you get over here? You get the answer as 10,10,065. 7,51,000. How do you get 10,10,000 here? That's 75,000. I've made a decimal difference also here, is it? No. 75,189.58. Okay. 10,10,225 pound. My dear friends, smoke is coming from my head. Are you all done writing this? I'll give you a 1 minute cool off time. Next one will be converting at the beginning itself and then depositing in UK. Far easier than this entire thing that we did now. All right, I'm going to the next part now, friends. I'll share all these notes with you. Okay, before the class, I pack up my class, I'll share this with you. Else, please remind me. Okay, next one is swap. So now I will put particulars. You have UK, then you have Holland, and then you have Switzerland. All right. What is the amount available with them right now? 75,000, 7,25,000. €7,25,000, and last one is 998,077. Now I will use the exchange rate. All right. So here, no exchange rate. So the balance, that is your opening balance in pound, is what we will get. So here you will get the same number. Okay. Whereas in case of Holland, we are going to sell euro and the other person is going to buy euro. Euro being the commodity, it's a bid rate. Spot bid rate is 0.6858. 0.6858 pound per euro. So we will multiply 497,205 pound. And what about the last one in case of Switzerland? In case of Switzerland, it is going to be Swiss franc. So they will give Swiss franc, the bank will buy and give pound. Pound is a commodity ask rate. What is the ask rate? 2.3326. 2.3326 Swiss franc per pound. Multiply or divide. Divide. You get 4,27,453 pound. Now add up all these three things. 75,000, 497,205, 427,453. 999,658 euro is what you will get, correct? I think there's a slight rounding of difference. That's okay. So once you get that, it goes about 10 lakh, the interest will change, is it? Okay. For Switzerland, 427,881, is it? I have done some mistake. 998,998,077 divided by 2.3326. 427,881. Yes. 881. So what's the total you get? Can you repeat once again, please? 10,00,000,086. Amazing. So once it goes above this, you have a separate interest on that. Now the interest rate will be about 10 lakh will be 5.375%. So it will be 10,00,086 into 5.375% into 91 divided by 360. So you get 13,587. 588 pounds. Okay. So what's the total you get? Ten lakh 13,674 pounds. So which is better, friends? I'll just write down below this. Closing balance under no swap. What is the closing balance coming under no swap that we found out earlier? 10,10,225. So what is the advantage or gain by swapping? That will be 10,13,674 minus 10,10,225. Do you get the answer as 3,449? Take 1 minute. Enjoy the beauty of this question. Sarvamangala, it's given in the question. CHF bar pound, right? They have given CHF 2.3295 and here they have given pound. So that means it's 2.3295 CHF bar pound. Perfect. So we are done with this question, friends. Shall we go to the next one? Okay. Question number 10 is a question on GDR. So I'll first write down working note number 1. Basic data. So friends, here they have told they want to raise fund of $15 million. So I'll write down point number A. Fund required is equal to $15 million. Net of issue expense, which is 2%. Therefore, net fund, or I'll call it as gross fund, to be raised That will be 15 million. Now we will divide it by how much? 98%. So I'll get the answer as $15.306 million. Only if I raise $15.306 million, I will get $15 million in my hand. The gain by swap is arbitrage gain, or it implies that pound depreciates in the future. SVK, that gain is how do I explain? It is an arbitrage gain, SVK. Pound depreciating in the future doesn't imply that. It's only because the interest rate is better in that case, correct? It's because of an arbitrage that you have a chance where you can exploit the opportunity. Yes. So the gross funds to be raised is 15.306 million. All right. Then I'll go to the next part. Down they have given the domestic market price is 300. MPS of one share is equal to 300 rupees per share, and 3 shares and 1 GDR. So therefore, MPS of 1 GDR will be 300 into 3. Do you get the answer as 900 rupees? They are being issued at 10% discount minus 10% discount. That will make it 810 rupees per GDR. Okay, next one. Down they have told the exchange rate is 60 rupees per dollar. Exchange rate is equal to 60 rupees per dollar. Okay, so once you have an exchange rate of 60 rupees per dollar, how much is 810 divided by 60? So GDR MPS in dollar will be 810 divided by 60, that is $13.50. All right, let me come down further. Yes, then they are asking the number of GDR to be issued. Number of GDR. Total fund I need is $15.306 million divided by $13.50. So 15.306. I think I'll get the answer as 1.1337 million GDR will have to be issued. I'll give you a minute's time. Please write down this in your books. Perfect. Can I go to the next part now? So I think once we are done with the number of GDR, now they're asking you to find out the cost of GDR to Odisha Limited if 20% of the dividend is paid with a growth rate. So I'll write down the next working note, cost of GDR. So they have given some data over here. Point number 1, they have told dividend is going to be how much percentage? 20%. And they have told there is a growth rate of also how much percentage? 20%. Okay. So I'll take the MPS after issue cost. That is what I will get in my hands. So that will turn out to be, I think earlier we got the answer as $13.50, but that was in dollars. In rupees, it was 810 minus 2%. Can you please tell me how much is 810 minus 2%? Do you get 793.80 rupees? Correct. Now here the dividend amount or the percentage is set to be how much percentage? 20%. So the dividend amount will be 10 rupees is the face value into 20 rupees, that is 2 rupees into 3 shares are there in 1 GDR. So do you get the answer as 6 rupees? So we can say P0 is equal to D1 divided by sum KE minus G. So once you solve like this, just check what answer you will get over there. 20.91%. So we have done and we have found out the cost of GDR also. I'll give you a minute's time. Please scribble down this. Right, friends. Can I go to the next question now? Perfect. Let's go to question number 11. 11 is a question on interest rate risk management. Is it 20.76%? Okay. What's the next question number? Question number 11. Interest rate risk management driven question. Working note number 1. Basic data. So here they have told the 3 months rate is given and the 6 months rate is given. All right. So first I'll write down point number A, spot rate. Is it 116 yen per dollar? Harishankar, your doubt is, isn't that D0? Again, that same confusing point comes in. Now, ideally, this should be D0. So we should find out D1. But your textbook has worked it out as D1. They have taken as expected dividend. Have they used the word expected dividend in the question? Please check that first. Yes, they have used the word expected. So then it is D1 directly. Okay. All right. Okay. So spot rate is 116. What next have they told over here? Let's check. 3 months rate is 4.5%. So 3 months rate, friends, 4.5% is per annum. So for 3 months, it will turn out to be 1.125%. What about the 6 months rate? That is 5% into 3 divided by 12. 1.25%. All right. Now from these two things, they're asking you to find out the 3 into 6 FRA. So friends, the formula would be 1 plus 1.125% into 1 plus FRA is equal to 1 plus 1.25% or 1.01125 into 1 plus FRA is equal to 1.0125. Therefore, can you work out and tell me how much will be the FRA that you will get over here? Hold on, I made a mistake here. Thank you for correcting me. It will be 6 by 12, is it? Okay. So wait, everything will change. Here it will be 2.50%. Can you work out and tell me what's the answer you get over here now? I think you'll get the answer as 1.36%. For how many months? 3 months. So what will be your annualized FRA? 1.36 into 12 by 3. You get the answer as 5.44%. I'll give you a minute. Please write it down. Perfect. Can I go to the next part now? Right. So the next part they are asking, analyze if there is any arbitrage opportunity. So I'll write down the next working note, analysis of situation number 2. Here they are saying, analyze any arbitrage if the 6 months LIBOR is 5%. So 6 months LIBOR will be 5 into 6 by 12. That will be 2.50%. Then they have given you the 12 months LIBOR. What is the 12 months LIBOR? That is 6.5% is your 12 months LIBOR. From this, I can find out the theoretical FRA. What will be the equation? 1 plus 2.5% into 1 plus FRA is equal to 1 plus 6.5%, or 1.025 into 1 plus FRA is equal to 1.065. Therefore, can you tell me what will be the FRA? Do you get the answer as 3.90%? Into 12 by 6, if I do, you will get the answer as 7.8%. Please write down this. All right, friends, I believe you're all done with this part. So once you're done with the 7.8% part, now we have the actual FRA. So I'll write down the next working note, arbitrage. So here we have theoretical FRA. How much is the theoretical FRA that we have? 7.8%. We also have the actual FRA. How much is the actual FRA that's given in the question? It is given as 5% and sorry, bank is quoting 6.5, 6.75. So from this, what is the status, friends? Can you tell me? Actual is cheaper than required. So friends, if actual is cheaper than required, what is the action that we will take? Will we borrow at FRA or invest at FRA? We will borrow at FRA. Now I will give you a proof for this one. First, I'll give you in a diagram format so that you understand it better. But in exam, you should give it in writing format, okay? So here I'll put 3 points, all right? Here, let us say we have 100 lakhs, okay? This will be 6 months, 6 months. And down I will give it for one shot, 12 months. So they have told for the first 6 months, the LIBOR rate is 2.5%. So if I invest 100, it will become 102.5. Okay, but here are we going to borrow at FRA or invest at FRA? We are going to borrow at FRA and we will be investing the same money downside. So it becomes 102.5. Now, if you borrow at FRA, it will be 6.75% into 6 by 12. So how much is 6.75 into 6 by 12? 3.375 percentage. So 102.5 plus 3.375 percentage will be 105.95. Whereas the same money, when you invest it down, you are investing at 6.5%. That will become 106.5. So when you see you borrow, you pay only 105.95. You invest, you pay 106.5. The net effect of this will turn out to be you're making a gain of how much over here? 0.55 lakhs. Hence proven that if you borrow at FRA, you will make profit. I'll give you a minute's time. Can you draw this diagram in your books? You want the previous slide? Aparna, you have a doubt. Why don't we consider 7.8%? Aparna, you mean to say why don't we consider 7.8% in this diagram? 7.8 is a theoretical FRA. That is just for us to know that that should be the FRA. But in reality, what is the FRA? 6.5 and 6.75. So when we say like this, what it means is that this is your deposit and this becomes your borrowing rate. Are you clear now? All right. So friends, we are done with this question. Also, shall we go to the next question? Friends, 12 is a very, very good question. I'm not doing it today because this is a question I want to take it to Super 25. All right. But mark this as a very good question for valuation. It has how long calculations are available on this. Please mark this as important and please attend the Super 25, in which this will be one of the questions that I'll be doing from valuation. It is basically the same old thing. Value is nothing but present value of future cash flows. But when you take the future cash flow, there is a formula: profit after tax plus depreciation minus capex minus additional working capital. So here you have a beautiful assumption that every time you invest in fixed assets, your cash balance comes down. So capex goes up, cash comes down. So basically your balance sheet will tally. So your total fund requirement will almost be the same. So that part I need to explain. So mark it as an important question. We will do it in Super 25. All right, friends. Yes, let me go to the next part. So I think this is the 13th, is the last question. With this, we can pack up today's session. All right. Are you ready to do the last one now? Perfect. It's a question on corporate restructuring. Friends, corporate restructuring is basically in FR, but they ask that in SFM also sometimes. So let's do it. They have given a balance sheet. Down, they have told company did not perform well. Working note number 1, basic data. Company did not perform well and has suffered sizable losses during the last few years. However, it is felt that the company could be nursed back. Equity shares are to be reduced to 25 rupees per share. All right, so let's go and check this and do it right away now. Okay, 1 minute. So how much is the equity share value right now? 100, right? 600 lakh is the total one. So that would mean that is coming down to how much now? 25 rupees per share. So I'll just come over here and write down. Current value is 600 lakhs. That is, if I'm not wrong, 6 lakh shares into 100 rupees. Now tell me, what will be your revised value over here? That will be the same 6 lakhs into 25 rupees per share. So what is 6 lakhs into 25? Do you get the answer as 150 lakhs? Okay. So here, how much is your savings? Savings means you don't have to pay so much of money now, correct? How much is the money that you save over here? 450 lakhs. Please scribble down. Fine. So the first part is done. So let's not call it as basic data. I think I'll call it as revised equity value. Okay. So working note 1 is done. Now let me write down working note number 2. So once you go to working note number 2, they have told preference shares are to be reduced with coupon rate of 10% to equal number of shares of 50 rupees each. As of now, it is 100 rupees. So I'll write down revised preference shares. Point number A, current value. How much is the current value? 200 lakhs. How do you get this 200 lakhs? It will be 14% preference shares of 100 rupees each. So it will be 2 lakh shares into 100 rupees. Point number B, we have to put the revised value. So now tell me, what will be your revised value? 50 rupees each, correct? So it will be 2 lakh shares into 50 rupees. So what is the answer you get over here? 100 lakhs. So again over here, how much savings that you make? 100 lakhs. Okay. Next one, they have told debenture holders have agreed to forego the accrued interest. In future, the rate will be reduced to 9%. How much is the accrued interest? 26 lakhs. Okay. So next working note, savings in accrued interest. Okay, that will be how many lakhs? 28 lakhs. Sorry, 26 lakhs. Next, I'll write down working note number 4. Down, they have told trade creditors will forego 25% of the amount to debt. So 340 lakhs. Savings on creditors. That is 340 lakhs into how much percentage? 25%, correct? So I think you will get the amount as how many lakhs? 85 lakhs. Perfect. So I believe we are done with the first part. Let's go to the next one. Down then they have told company is issuing 6 lakhs equity shares of 25 and the entire sum was paid on application. Entire amount was fully subscribed by the promoters. So the next working note heading will be fund raised. So how much is the fund raised over here? 6 lakh shares into 25 rupees. How much is 6 lakhs into 25 rupees? You get the answer as 150 lakhs. This extra money is raised. Okay, land and building to be revalued at 450. Revised land and building, that is 450 lakhs. Earlier in the balance sheet, what was the value of land? 200 lakhs. So there is a gain of 250 lakhs. Gain will be 250 lakhs. Okay. Plant and machinery was to be written down by how much? 120 lakhs, and a provision of 15 lakhs had to be made for bad and doubtful debts. So plant and machinery, let's check. Right now it is 300 lakhs. You have to bring it down to 120 lakhs. $120 lakhs, right? Earlier, how much was the value? 300. So here you make a loss, that is 300 minus 120, that is 180 lakhs. All right. Then the last part they say, okay, provision for 15 lakhs on doubtful debt. So you have to make a provision. So once you do this, I'll just show you the final answer now, friends. All that we found out is all available here. Yes, now look at this. Did we get the same answer as 450 lakhs? 6 lakhs into 25 rupees is the new value, so 75 reduction. Preference share, we got 100 lakhs, outstanding 26 and 85. Total, we get the value as how much? 661 lakhs. Asset revalued, you got 250. Total gain 911. Now what happened? This money is used for writing off all the assets. P&L account written off, debenture cost 5 lakh written off, preliminary expense of 10 lakhs is also written off, bad and doubtful debts written off, plant and machinery brought down 120 written off. So after you do this, you get a capital reserve of how much over here? 236. So gain 911, loss 675, capital gain, capital reserve 236. Keeping that, you draw a new balance sheet. So now you have new equity value, new capital reserve, and your balance sheet will tally. Whatever is the balancing figure will be given to cash. I'll give you a minute's time. Please read through this. If you have any doubts, please let me know. Trade 120. Did I say something wrong? I think I made some sentence error over here. Yes, plant and machinery was brought down to 120. So brought down by 180 lakhs. I hope I told it correctly. Oh, the question says write down by, is it? But they have solved it by taking directly to 120, is it? Let's check. No, I have written to 120. So loss is 180 lakhs. Let's check here. Oh, okay. So loss is 120. That's a typing error then, friends. I think what you're saying is right. You can do that. So ideally here you should get 180 lakhs should come over here, correct? Correct. So you put 180 lakhs and put the remaining as your balancing figure in capital reserve. All right. Please read through this part now. Perfect. I'm going down. This is a balance sheet. Just go through the balance sheet now. SVK, you want me to unmute yourself? I'll do that. Give me a minute. Hold on. Fundraise should come as capital. Has it not come as capital? This is what happens when they put an FR question in SFM. SVK.
Hello, sir. Sir, this is Kritika here.
Yes, Kritika.
Uh,
Tell me.
So what's written? Actually, you have written it right here. You have written it down by 120. So the loss is 120. Where that's what we will use, no, sir. Whatever gain we are getting or whatever loss we are writing down, that's what we'll use. So what's given in the RTP answer is right.
No. What they have done is in the question they have told the value is written down to 120.
No, written down by 120.
Shall we read
So
the
by
question
is the
again?
loss.
Let's read the question once again. 1 minute. Plant and machinery was written down by 120 lakhs. Okay. So, okay, if that is the case, then you have to, then the answer in the RTP is correct. The what I wrote is incorrect, is it?
Yes, sir.
Okay, so I'll
If
change
it
it
is
over
2,
here.
you
Written
are right,
down.
sir. If it is 2, you are right. If it is by, RTP is right.
No, it is by only. So I'll change it to 120 lakhs over here. Okay.
Thank you, sir.
Thank you so much, Kritika. Now, one more thing. Fundraise 150 lakhs is not seen in the balance sheet. We'll go and check. No. The opening balance of 130 plus new equity shares of 150. That's how they got 280 lakhs over here. But that money, yes, they have shown it. See, here it was 150 lakhs, right? It's shown as 300. So that means 150 of the earlier capital plus new 150 has come in. It's become 300. It's come in. Okay. Perfect. So friends, I believe we are done with this question also. And I think with this, we are done with the chapter of SFM. The next two are theory questions, friends. One is a question that is eligibility of being a startup. So you can get up to 10 years, your turnover, etc. is given. You should work towards innovation. All this is covered in the theory marathon. And pricing of securitization can be done either from originator or the investor's angle. So these two things also, what's an originator, what's an investor, etc. is explained with the help of an example of a lot of celebrities over there. So you can go through that for the theory marathon in order to understand all these things. All right. So we are done with the RTP, friends. Illustration 1 from SM. Bhavya, I didn't follow. Can you please repeat? All right. So we are done with the RTP. One question I have kept pending, friends, that we will do it as a part of Super 25. I hope you all understood whatever was taken today. Friends, we did it a little fast, but I wanted to do it quick because we had to finish it in a span of 3 to 3.5 hours of time. If you sit alone, it would take much longer. Now I will share these notes with you right away now so that you don't miss out. I'm putting it in the RTP group, okay? And also in the TJ squad. It's a question from the study material, is it? Okay. RTPs are normally full of study material questions only, Bhavya. Aditya, your pic has come in the YouTube link. Where is that? RTP November 23, right? All right, I'll send it to you in WhatsApp right away now. All right. So I'll just put it now itself. So just confirm that you get it. Otherwise, once I pack up my class, there will be a lot of communication gap. Please confirm I have sent it. I have sent it in TJ Squad group. Yes, Aditya. All right. So shall we conclude our session now, friends? All right. So let's conclude now. So we are done with RTP. In the same way, we will do MTP Series 1, MTP Series 2, and we will also do Super 25. So keep learning along with me, friends. Let's work together as a team. Let's clear in this November attempt. All right. I'll see you in the next MTP session. Have a nice time. Take care. Good night. Thank you so much, everyone. Good night.